Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now, today's episode, we're going to talk about what it's like to get denied for a year straight on all new credit cards, especially as someone who loves to make money off of credit cards, is easy money, and is on TV talking about credit cards on a weekly basis. Twice a week over here, actually. You should get subscribed and you can see it all. But anyways, we'll break down how this happened, why it happened, what I feel about it, and then, what I'm going to try to do going forward to sort of get more approvals going. So, of course, if that sounds interesting to you, go ahead, press the subscribe button, and let's get to work. Now, of course, if you're new here, there's two channels. This one has primarily become the credit card and news show. We do the news every Sunday, and then over on the second channel, Run on the Bank, and then ProfitableContent.com, we do bank promotions. And so, last year I went pretty hard on 2024. I got 20 or something new cards all over the place. Made about $9,000 in credit card offers and points. And that's always my goal, as you know, to make a minimum of $5,000 from credit cards, 10 from bank promotions, and 10 from referrals. But specifically for credit cards, you can only do so many before you start to get denied. And the reason being is you simply are identified as a risky customer or a unprofitable customer, in which case I would say yes to both. And that's so much the risk, but there is risk that, there's no context behind credit card applications because they don't know why would a normal person need that much credit this fast, right? And then if they can see how much credit you're using, and if you're not using it, well, then you must be unprofitable. And so you can see how after a quick run of, 15, 20 cards, the denials start to pile up. And so I'll put it on screen, but I got approved for basically anything I could because I was just trying to make as much money as possible. I did things like the Venmo card, the Rocket Mortgage card, Huntington Bank had a card, you name it. If it offered an intro offer, I'll sign up for it. I have no shame. I'm pretty much a degenerate. So after a while, you can see that these start to pile up. And it's around probably summertime of 2024. I definitely started to get denied about a lot of things. Discover was my last approval, and that was in June, I want to say 2024. Discover, I'm told, will pretty much take anybody. That's why I applied for it. But a Bank of America Premium Elite card, the Citi Strata Premier, the Wells Fargo Journey card. Those are a few that come to mind. I'm sure there are others in there. The Apple card, believe it or not, because I thought Goldman Sachs was in trouble they got him in trouble because they had to approve everybody. Apparently not the case. So the point being is one of those things we can kind of take for granted is approvals, right? And there's a whole other side out there who getting approved for a credit card is not necessarily a guaranteed thing. So what's it like to live like the other half? Now, we're not necessarily trying to make fun of them. There's a lot of people working on their credit and everything, and that's great. It's admirable. You should do it and you'll get there one day, but you just got to understand once you're fairly established with a credit file, approvals for credit cards are pretty much a layup until you end up doing what we do and being degenerates. And because I've always said credit cards are kind of a joke of a product because they're taking stated income. And anytime you're taking stated income, it's not a serious loan. It's just that you can get into trouble with it. It's a real financial product to be sure, but it's just stated income. It's kind of a joke, but again, they have to draw the line somewhere, right? So here we are. So, the few things that come to mind is number one, just the change of, as I just said, when you submit an application, I don't really care. That's why a lot of folks have done the watch me apply videos, and good for them. They must be popular. I've personally never thought it was interesting because for the longest time, if you submit it, why would you not get approved, right? You get into the 700s is pretty much good, but now that's not the case. Pressing the submit button is no longer just a layup anymore because you're I don't really know if I'm going to get approved or not. Now, I would say you have a much better understanding given how easy all the apps show all your credit cards. I tend to use my Rocket Money app, not a sponsor thing. I used to work there, and that it does link pretty well to my 3 mortgages with Rocket Mortgage, and they have a section that shows you your inquiries, and so I'm sure I'll put it up at one point here or there. But anyhow, now that you can tell the count, I guess it's not as surprising, but even still, not every Chase was known for having 524, 5 new applications in the last 24 months was an instant denial, and then there was that spot where they kind of removed co-branded cards because the co-branded partners complained. Bank of America's always had 3 and 12 or 7 and 12, but after that, for the most part, you could get it. But it seems Wells Fargo and Citi have joined in as well. So that was the first change I noticed. It's just not a layup anymore when you submit them. The others is more so just how it ends up being restrictive. And by that I mean, obviously the biggest one is in earnings, right? It's fairly tough to get to $5,000 just spending, right? Now this year's a little bit different because we had basically almost a year of Smartly, of US Bank Smartly card at the 4% tier, which I was at. I earned about $2,000 on that card in cash back. It will be a little bit more by the time it's all said and done. And you're watching this later, but it's late August right now, so I'll do a little bit more. It's done September 15th for me in its current form, so that's kind of an outlier though. But if I didn't have Smartly, it would have been really hard to get to the $5,000 mark, because that's $2,000 and some change alone for one card just through spending. If you really want to hit $5,000 a year in cards, you're gonna need some intro offers. So that's one thing. It's very limiting. It's still doable, but it's very limiting. The other thing is like the restrictions and limiting of being able to miss out on opportunity cost, right? There's been some new offers. The cards themselves, I think, are pretty bad. Being the Citi Strata Elite, the Strata card, of course, the white one. Chase revamped the Sapphire Reserve, and it also a business Sapphire as well. Again, all terrible cards in my opinion, but they're intro offers nonetheless, but you can't get any of them, so you're really missing out. And again, those launch intro offers are usually the high point. Now, yes, we normally see them again. We've seen the Sapphire Preferred, 80 to 100 once a year in the spring for the last few years now, so they're not gone forever by any means, but you lose out on being able to immediately take advantage of these things. Another one like Bank of America had, the customized cash card, the red one. It's giving like 6% cash back. It's the $200 plus, like that rotating category that you choose. Instead of doing at the base, it's 3%. It's giving base 6% up to $2,500. That would have been a really good one to take advantage of, but I know I'm much over Bank of America's 7 and 12 rule as an existing customer. So you just kind of miss out on all these offers, which is pretty tough. The other one is, it's like I would describe it as sometimes trying to do a project around your house or fix something and not having the right tool, the right thing, so you end up trying to like rig something together to like make it work. Like, I don't really want to go buy this thing to use it once, but that thing would make this super easy if I had it. It's kind of like that. And by that I mean there are, across the course of a year, things change, spend categories change, cards themselves change. Like Smartly, for example, that's actually a perfect example we use for this. Smartly, again, for me at the moment, it's a 4% card, but the changes they're making, requiring that 100 grand to be in a checking account, means this is going to drop to a base 2 card for me. And I don't have any other 2% cards. So I really need to get a 2% card, or I need to get specifically another Bank of America Unlimited Cash card, because for me in Platinum Honors, that'd be 2.6%. But I'm still over the 6, 7, and 12 rule, so can't do that right now. So I guess you got to use the 2% Smartly card, and I can't yet try to convert it to a Cash Plus card. I don't know if they'll let me or not, because I still need a 2% card. So in that regard, it's limiting the options of tools that we have available to us. So, overall, I mean, again, I guess you didn't need a whole video for me to tell you it's not fun to not get approved, but I do think it was worth addressing or talking about, because on one hand, again, as we said, we're not here to, we're here to help and encourage those people who are rebuilding their credit and getting to a spot where they can take it, or even younger people who just can't fire through with the velocity that we have. And so I never really like sit around and think about it really from their perspective, because I'll get messages and stuff and people will like, be annoyed and upset. I'm like, yeah, well, I mean, I don't know what you expect, but I get it. It is annoying and it is limiting. I mean, again, I made $9,000 last year. I wouldn't trade it or regret it for anything, so don't feel too bad for me here, but just, another perspective, if you will. So a few things going forward. I don't think this is going to stop, because, again, as we said, we've seen that 524 rule expand to Citi. We've seen Wells Fargo, who's historically never really had that many cards that people wanted. They seem to have picked it up. My denial letters have referenced 524. So I don't think this is necessarily going to change. I mean, sure, you can play the business card game, but they still look at inquiries as well. So I think going forward, we're just kind of have to pick your spots more. I think that's probably what I'll do, especially now that I have a pretty much solid 5x setup built up. For me, paying property taxes in the winter and the summer, like that's a large amount to spend very easy. You could throw homeowners in there as well. I'll probably just try to tie larger approvals around those points instead of just going super fast through the cards. Plus, I'm running out of cards anyways, really, because a lot of cards you don't really get rid of. You don't churn nearly as many as you think. Custom Cashes I keep, Freedoms I keep, Discovers I keep, Ink card, I keep Cash Plus, I keep Bank of America cards, I keep. So you really don't churn as many as you'd think. So, unless you want to move into travel cards, which I probably will get a few eventually just to top up some accounts, picking your spots might be the better angle. The other thing besides gardening is the obvious one, right? That just means you don't apply for any cards. You just get forced out into the garden sometimes. We can also try having a relationship with the bank. That's what I'm trying now with Wells Fargo in conjunction with gardening, right? So, again, for me, September 1st, I will drop to 624. I kept my Wells Fargo personal checking account open. I am sending a direct deposit over there just to avoid the fee. I had opened it for the promotional offer, of course. And so when I drop to 624, I'm probably just going to try to apply again for a journey just to see if I can get it for the $600. Given you've got a relationship with them, that might do the trick. It might be enough for them. I don't know. I've seen some data points that say yes, some say no, depending on your account. I'll also try for the Bank of America card as well, which really means I'm probably going to sit there with two web browsers and press send on both applications at the same time. Like you can play around with the window a little bit, seeing, because a lot of times it'll take them maybe a month or so before they actually report the new account to the credit agencies. But if you even want to play around with the inquiries, you can do that as well. You can try it and see. That's probably what I'll end up doing. But the relationship thing is probably it. The other one is there are still deals to be had. So the two cards at the time of taping that I've given and proven for was Ramp, which is a business card. We did a video on Run on the Bank about it, which it was through someone's affiliate link, not my own, but it's basically like spend $1,000 to get $1,000, which is a pretty nice offer. They haven't paid out at the time of taping, but pretty nice offer. But they were advertising, they do want real businesses, but they don't do credit pulls, right? They were basically verifying it off income you have within your business checking account. So that's a much easier approval when they don't do that. Key Bank, believe it or not, they had a business account to open in branch. And when you went in branch, they were also trying to sell credit cards and sell payment processing services. So I did that one. I didn't get a hard pull for that either. We've seen that sometimes, like Wells Fargo years ago when they had a business account, you had to go in branch. I figure I've got you in branch. Let me sell you as many products as I can. And a lot of times they're more lax on the requirements. So you can try to stack things like that. I mean, it was only $200, but again, you're trying to get to $5,000, every dollar counts. And then I would say the alternative cards or co-branded cards, sometimes it's hit or miss. I was talking to a guy the other day about was it the Gemini credit card, was a crypto card, and I was like, yeah, you probably have a better chance of getting approved like something like that tends to cast a wide net and then manage risk through credit limit. I think, funny enough, he got denied. Well, not funny for him, but relatable. So it's not to say it's a sure thing, but even towards the end of my 2024 run, I was still getting approved for like Venmo card, for example, and Rocket Mortgage cards that tend to cast a wider net because they're aimed at a wide range of people, and then they manage it through credit limit and interest rate and things like that. So you could still look at something like that as you get towards the back end of denials if you want to. But again, for me, I'm just kind of gardening, I guess, forced gardening. I think I'll do a separate video on what I think the strategy coming out into mid 2026 is going to be when I drop way low under 524. Because at that point, it's going to be, do you want to make money or do you want to solidify your setup? I know other folks have suggested, if you want a card, why don't you just product change to it? And a lot of times I do product change to it, which I think goes into picking your spot. I could technically apply for another Cash Plus, but you're talking about $200 or just flip the Smartly card, again, if they allow it, to the card that I'm going to use instead of wasting up that slot and inquiry get a card that pays significantly more money, right? That's probably what I'll also try to start doing. If you're going to pick your spots, go for the higher dollar ones as well. So you could do that. I'm pretty bad. I just want all the money. So I go after all of them, but it's going to be tough because I don't think we're going back anytime soon. We will eventually shift back. I mean, sales goals change, management changes, right? They've changed credit card rules, especially on the ink line. They used to have the rule if you couldn't have the card currently, and they got rid of that one. I knew at one point people were getting ink cards 30 days apart. Now it's a little bit different. So it will change again, but for right now, I think that's kind of where we're at. So those are some of the things I will probably look to do as I can get some of these approvals overall, and then just try to build out the strong setup so that when I'm not getting intro offers, I can still fall back on getting 5% on the majority of things. But overall, yes, if you didn't know, it does suck to not get approved. So newfound appreciation for you guys who can't get approved right now, but again, you're working on it. You'll join us eventually. So that's been my story, getting denied for most things. But again, like we say, we eat credit pulls like Skittles and shooters shoot, and we're going to keep doing both of those things on this channel. Just sometimes you got to be a little bit more pragmatic about it. And that's what we're doing right now. So give me your story down below. Let me know how it's going for you, or you can just laugh at me for applying for any and everything around. Again, I'm a degenerate. I totally understand. But again, if you like this one, drop me a thumbs up down below. If you're not particularly interesting, consider subscribing to the channel. So we're posting content just like this every single week. And of course, right back here every Sunday with all the news you can use in the week that was in credit and finance. And of course, every single day over on profitfulcontent.com. As always, thank you so much for watching. I'll talk to you very soon in the next one.